A brand new Toronto condo just entered receivership. 194 units built, 70 of them still unsold. And this is not an isolated story. This is a signal. The GTA condo market has been under pressure for a while now. But what is happening in July 2026 is different. The cracks are showing in places most people did not expect. And the data behind this story is something every GTA buyer needs to understand. Here is what the numbers are actually telling us right now. The GTA benchmark home price for June 2026 came in at $940,800. That is down 5.4% year over year. The average sold price across all property types dropped to $1,058,658. That is a 3.9% decline from last year. But those are the broad numbers. When you break it down by property type, the picture changes dramatically. Detached homes dropped 2% year over year. Semi-detached dropped 4.7%. Freehold townhouses dropped 5.5%. Condo apartments dropped 9.4% year over year. Let that sink in for a moment. Condos are falling nearly 5 times faster than detached homes. That gap is not a coincidence. It is the story of 2026. And here's the part that actually matters for buyers right now. TD Economics is now projecting that Toronto condo prices could fall below pre-pandemic levels. That would represent a correction of roughly 25% from the 2022 peak. For context, that peak was when condos were selling for prices that felt untouchable. Now analysts are saying we may not just retrace that gain, we may go further back. That is not panic language. That is what the institutional data is projecting. The reason this is happening comes down to one word: investors. The Toronto condo market was built heavily on investor demand. Pre-construction purchases, rental income assumptions, and appreciation expectations fueled decade after decade of new supply. When interest rates rose sharply, the math stopped working. Monthly carrying costs exceeded rental income for many investors. Listings flooded the market, and buyers stepped back. New condo sales in the first quarter of 2026 fell 52% from a year ago. That is a 35-year low for new project sales. The pipeline of new supply is stalling, and the existing inventory is sitting longer than sellers want to admit. Average days on market in June 2026 hit 42 days across all property types. For condos specifically, that number is even higher. Buyers are patient right now. They have leverage, and they know it. And before I continue, if you are finding this useful, hit subscribe so you never miss a GTA market update. Now back to what we were talking about. Now here is what gets interesting when you look at this city by city. Not every part of the GTA is experiencing this equally, and that matters a lot depending on where you are looking. Vaughan saw average prices drop 10.9% year over year. Markham dropped 6.2% year over year. Mississauga dropped 6.7% year over year. These are 905 cities that absorbed enormous condo and townhouse development over the past decade. The investor concentration in these markets is high, which means the repricing pressure is concentrated here too. The city of Toronto itself is holding up slightly better in comparison. Toronto's average dropped 4.1% year over year. Certain desirable neighborhoods in the 416 still have limited inventory for freeholds. But smaller investor-focused condo buildings in Toronto are under significant pressure. And this is where the receivership story connects back. The Manderley project near Kingston Road in Birch Cliff had 194 units. 70 units remain unsold. The developer Nova Ridge Development Partners, Inc. is now in receivership. This is what happens when a project financed during a hot market meets a cold sales environment. This is not the first GTA condo receivership this cycle. And analysts watching the pipeline closely do not expect it to be the last. So what does all of this mean if you are actually in the market right now? If you are a first-time buyer considering a condo, here is the honest picture. You have more negotiating power than buyers have had in years. Sellers in investor-heavy buildings are often motivated. Some are carrying negative cash flow every single month. Days on market are long. Multiple offers are rare in this segment. The steepest discounts in the GTA right now are concentrated in condos. That said, buying into a declining asset without a plan is not a strategy. The question is not just whether the price is lower. The question is what your holding period looks like. TD Economics and most analysts are projecting continued near-term weakness for Ontario condo prices. A price recovery for condos is expected to be slow. Some forecasters are talking about a couple of years before real stabilization appears. If you are buying a condo to live in for 5 to 7 years or more, the current pricing environment may represent a genuine long-term opportunity. If you are buying to flip in 12 to 18 months, the data does not support that plan right now. Now here is something almost nobody is talking about in this conversation. The supply side is changing in a way that will matter later. New condo project sales are at 35-year lows. Developers are pausing. Minto recently pivoted an entire 5-tower Mimico proposal to purpose-built rental instead of condo ownership. When developers stop building ownership condos at scale, future supply thins out. The units being stalled today are the inventory that will not exist in 2028 and 2029. What that means for patient buyers who purchase now at corrected prices is significant. Historically, constrained future supply has supported price recovery in Toronto area markets. Current data suggests the seeds of the next cycle are being planted right now. That is not a guarantee, but it is worth understanding as you evaluate your own timeline. If you currently own a condo in the GTA and are wondering what to do, here is the realistic picture. Selling into this market means accepting current conditions. Prices are lower than they were in 2022 and 2023. Buyer expectations are anchored lower, and days on market have extended. If your financial situation is stable and your holding period is flexible, waiting out this correction cycle may be the more practical path. If you need to sell for personal or financial reasons, price it competitively from day one. Overpriced condos are sitting for months right now. Realistically priced properties are still moving. The broader GTA market is in a genuine transition. The months of supply sitting at 4 months indicates balanced overall conditions. But inside that balanced headline, the condo segment remains clearly buyer-favored, and certain freehold pockets are beginning to tighten. Markets do not move as a single block. That has never been more true in the GTA than it is right now. The people who understand these internal splits are the ones making better decisions, whether you are buying, selling, or holding. That is what the data is showing us this week. What you do with that information is entirely up to you.